Imagine this. You deposit just $20 into your Forex account. It's a small sum, maybe the cost of a meal or a few coffees. But then, you watch it grow. Within a few weeks, that tiny seed blossoms into $200, then $500, and maybe even a life-changing $1,000. It's the ultimate trading dream, the one that gets so many of us started. Sounds incredible, right? The kind of story you see plastered all over social media. But let's be honest, for the vast majority of traders, it stays exactly that. A dream. Why? Because they fall into the same traps. They over-leverage, they chase losses, and they treat their small account like a lottery ticket instead of a serious business. They trade with desperation, not strategy. But what if I told you there's a different path? A methodical, tested approach that gives you a genuine fighting chance to systematically grow your account without gambling it all away. In this video, I'm breaking down the exact strategy. This isn't about get-rich-quick schemes, paid signal groups, or blind luck. It's about having a clear, repeatable system, executing it with unwavering discipline, and most importantly, treating that $20 account with the same respect and professionalism you would a $20,000 portfolio. The principles are identical, so stick with me, because the final section reveals a psychological trick that is the absolute key to making this work. It could be the single biggest factor between blowing your account yet again and finally seeing consistent growth. Here's the hard truth. 90% of traders fail to grow small accounts. Why? Because they treat a $20 account like a casino chip. They risk everything on one trade, they chase losses, and they use insane lot sizes because they think flipping money means gambling. And within a few days, they blow it all. The reality is, a small account doesn't fail because of the money. It fails because of the mindset. If you think $20 is too small, you'll never respect it. But let me tell you, I've seen traders grow tiny accounts simply because they respected the rules. So, what are those rules? Let's get into the strategy. The best way to flip a small account is not to trade randomly. That's gambling, not trading. You need a framework, a clear, repeatable, step-by-step system that removes emotion and guesswork from your decisions. This framework is your rulebook, ensuring you have a logical reason for every action you take. Here's how it works. First, you must trade in the direction of the trend. We identify this on the 4-hour time frame to filter out distracting market noise. I personally use the 50 and 200 exponential moving averages. If price is above both and the 50 EMA is above the 200, we are in an uptrend. If price is below, we're in a downtrend. Never fight the trend. Small accounts can't afford unforced errors, so making the trend your best friend is non-negotiable. Next, look for order blocks. An order block is where big institutions, the smart money, have placed significant orders, often marked by a strong engulfing candle. This is where real buying or selling pressure originates. Once you spot an order block on the higher time frame, refine it on the 15-minute chart. This lets you pinpoint a precise entry, creating a low-risk, high-reward setup with a tight stop-loss. Now here's where most traders go wrong. With a small account, the temptation to risk it all is huge. Wrong. That's a gambler's mindset. You must be a professional risk manager. You only risk a fixed percentage. For example, 5% to 10% of your account per trade. So, if you have $20, you risk $2. If you lose, it's a calculated loss, and you live to trade another day. If you win, you compound your account sustainably. This discipline is what separates professionals from amateurs, and here's the secret: methodical scaling. Don't try to make $1,000 in one trade. Set realistic milestones. Grow $20 to $40, then $40 to $100, then $100 to $250. At each milestone, withdraw some profits. This pays you and makes the gains feel real. Psychologically, this is powerful. It builds confidence and security, and you begin trading with the market's money, not your own capital. This is how you build a robust account and a resilient mindset. Let me show you how this works with a simple, high-probability setup. Imagine you're analyzing the USD pair. On the 4-hour chart, the 50 EMA is trending cleanly above the 200 EMA, confirming a strong institutional uptrend. Price then pulls back into a bullish order block you've marked, that key area where big players previously bought in. This confluence of trend and structure gives you a solid reason to look for a long. To pinpoint your entry, you drop down to the 15-minute chart, waiting for a clear sign of bullish momentum before you act. Now, you execute. You set your stop loss at 50 pips, just below the order block's low, and your take profit at 100 pips. That's a clean 1.2 risk-reward ratio. With just $20 in your account, risking 10% means you're risking $2. If the trade hits your target, you've made $4. It doesn't sound like much, but this is where the magic begins. Now let's apply the same logic to a different scenario. A short trade on GBPJPY. Here, the 4-hour chart shows a downtrend, with price retesting a bearish order block. You enter on the 15-minute confirmation, risking $4 from your new 24-hour balance to make $8. Suddenly your account is at $32. At $100, you risk $10 to make $20. Keep scaling with this disciplined approach, and the numbers start compounding exponentially. This is the raw power of discipline and compounding. One trade won't make you rich, but the consistent, methodical execution of your edge, whether long or short, is what will ultimately transform your trading account. Here's something you need to tattoo into your brain. Flipping accounts is not about luck. It's about discipline. The strategy I just showed you works, but only if you follow it strictly. That means no revenge trading, no over-leveraging, and no emotional decisions. If you lose a trade, that's fine. It's part of the game. What matters is that your winners are bigger than your losers, and over time, your account grows. Think of your small account as training. If you can respect $20, you can respect $2,000. If you blow $20 because you were greedy, you'll blow $2,000 the same way. Your mindset is the real account size. So to wrap it up, the best strategy to flip a small account into bigger money is simple. Trade with the trend, use order blocks for sniper entries, risk only a fixed percentage, and scale your profits slowly. Respect the process, and the market will reward you. If you found this video valuable, hit the like button, subscribe, and share it with someone trying to grow their trading account. And stay tuned, because in my next video, I'll reveal the 5 deadly mistakes small account traders make, and how to avoid them. Trust me, you don't want to miss it. Remember, flipping accounts isn't about how much you start with, it's about how disciplined you are in the process. Trade smart, stay patient, and your small account can turn into